Hello dear traders, today is the 4th of June, Tuesday. I'm online again with a regular market review prepared for InstaForex. Our trading idea for a rise in the euro-dollar pair was worked out yesterday. I also provided you with a breakout strategy. Now let's look through the macroeconomic calendar. This week traders will pay close attention to the US non-farm payrolls and unemployment claims data. Today, traders may take into account the US job openings figures. In general, the week is expected to be volatile. On the trading chart, we can see the gold prices are gradually falling. On the 1-hour chart, there is a swing low. It's better to pay attention to such an opportunity. Notably, the trading instrument is hovering within this sideways channel. Thus, it is quite logical to open positions from the lower limit only in case of high liquidity. Even if the trading instrument drops, it is possible to earn in both cases. Gold has room to decline. Yesterday, the euro-dollar pair worked out a bullish scenario from the swing low. Curiously, this was a weekly setup. I thought that the pair would rise amid non-farm payrolls data, but it happened earlier. This is also a favorable situation, as non-farms could bring a new scenario. At present, there are no trading ideas. The pound-dollar pair also reached new highs. However, I'm concerned about some tails that you can see on the chart. It will be better if the instrument updates them. It will be monitoring the dynamics in this area. Curiously, the pound sterling broke the extreme levels near 1.2813. Returning to the euro-dollar pair, those who yesterday bet on a breakout of the three levels marked red on the chart earned 200 pips. The Australian dollar is hovering in the lower area. I suppose that everyone is waiting for the non-farm data. If the US dollar loses value, the Australian dollar will rise. I still believe in the upward movement. The dollar-yen pair has started falling. If traders rely on the big three-wave structure, they may leave the market at the level of 151. For now, I'm going to stop there. Stay tuned for our next video review.